What's up, apes? Welcome back to the 𝗪𝗚𝗡𝗃 video stream of the day. It is a phenomenal day over here at the 𝗪𝗚𝗡𝗃 global headquarters. It might even be a holy day at this point, and I think we all know why. How about them Boston Celtics, baby? 18 championships confirmed once again on the anniversary of our 2008 championship. The official best team in NBA history, even though 11 of those championships were won in the Bill Russell era in the 1950s and 60s, but still, it is now officially confirmed that the Celtics, like the Patriots, are the best team in their respective sport. I would like to say a quick thank you to our Lord and Savior Jason Tatum, our Finals MVP, Jaylen Brown, and my personal favorite player, Al Horford. Now, let's go ahead and get into what you actually came to watch this video for. The WSO Alpha portfolio. Guys, this is the Wall Street Oasis proprietary investment portfolio. You can join, you can see the trades, you can see the positions that we're holding, how much money we're making, losing, if you go ahead and subscribe to WSO Alpha. So go check that stuff out. There's also a sick Discord where you can roast us, bully us for all the money that we're losing. Thankfully, we're only managing our own money. It's me, it's Patrick, Nabil, a couple other guys on the team over there. Definitely come and hang out with us in that Discord at the very least. There's a bunch of free channels in the Discord, but the really fun stuff happens in the paid channels. But with all that said, we did lose 32 basis points on the session here today. We were brought down by some of our more recent purchases. Enphase had a relatively tough day compared to, its history. But Snowflake was really the vibe killer, down 2.35% for the session. Meanwhile, the S&P 500, the NASDAQ both absolutely ripped because they're balls deep in Nvidia. The S&P was up 25 bips and the NASDAQ was up just 3 bips. So excuse me, did not absolutely rip whatsoever, but they certainly beat the shit out of us for the day. But who cares? Just one day, we don't get too braggadocious when we outperform. We hope they don't either. But either way, come and join us. Come along for the ride. I mean, it's not like you got to put money into this thing. It's just fun to see what we're doing, see our ideas, bounce ideas off each other, and of course, a healthy amount of bullying along the way. Anyway, let's go ahead and move on into some of our banana bits. There's another reason to be marking your calendar for today besides the Celtics making history, and that is we have a new most valuable company in the entire world. So let's go ahead and check the charts. We have Nvidia officially surpassing Apple and Microsoft to become the most valuable company on planet Earth. Absolutely unbelievable, more than 10x their market cap in less than 2 years. It's some of the fastest growth in the history of capitalism, and that is not an overstatement. Two of these companies combined add up to the damn Dutch East India Company, which is the largest company of all time. It's absolutely unbelievable. If Nvidia was to double, or Microsoft or Apple were to double their share price, even in the next 5 years or so, it would be the largest company in the history of the world, larger than the Dutch East India Company, which had an estimated market capitalization of about $6 trillion. So we can see Nvidia is at 3.335 trillion, Microsoft at 3.317 trillion, Apple at 328, and we have Google, Amazon. Saudi Aramco is still holding strong in that number 6 position. The other countries on this list, I bet you'll be surprised what they are. Not necessarily with Taiwan because, of course, TSMC. But did anybody expect Denmark to make this list? I certainly did not, because I don't know what the hell a Novo Nordisk is. But apparently it is the 12th largest company in the world. I'm just kidding. It is a healthcare company. They are behind one of those. I'm pretty sure they make Ozempic, or they definitely make one of those like anti-obesity excuse drugs. I mean, so it's understandable why they're that large. I think they might have made some COVID vaccines as well. I could be completely capping on that. But either way, congratulations to Nvidia and the world's newest rock star, Mr. Jensen Huang. Anyway, meanwhile, CEO confidence has been rebounding. Nobody has any fucking idea why, but it's probably because these people make hundreds and hundreds of times as much money as you do for probably roughly the same amount of material work. Boeing CEO, speaking of CEO, this guy is literal scum of the earth, but he was in front of Congress today and he was getting absolutely flamed. It was one of the funniest things I have ever seen in my life. So definitely go ahead and check that stuff out. When your planes are responsible for killing literally hundreds of people, then, it's probably time to get roasted by Congress. And this guy, although, it's been quite a while since the original deaths with the 737 Maxes, still some very heinous problems going on. I would be pretty upset if a door that I was sitting next to just blew away in the wind when I'm 30,000 feet up in the air. Either way, markets are back to focusing on growth rather than just interest rates. And we can see this in the spread between the NASDAQ 100 and the Russell 2000 in the way that markets are kind of trading them. Let's go ahead and check that stuff out because it seems like a narrative shift is underway, and we're going to be talking about it in the coming days. Okay, but let's go ahead and focus on the main story of the day, or our biggest story. This is the most important economic report, hands down, or the stuff that we're covering here today, because what we're talking about is consumer spending, or specifically, we have two of the best proxies for consumer spending that we're covering here today. First and foremost is retail sales, and secondly is the Bank of America Consumer Checkpoint. So retail sales, it's the ugliest chart in finance, and this is what it looks like. Basically, that's March, that's April, that's May, and what they're measuring here is in this black line is total retail sales for the month. This white line is ex-auto retail sales. This line that you can actually see is just auto retail sales. And this other one is general merchandise. So the bullshit that nobody needs, but we like to waste our money on anyway. So as we can see in this chart, ex-auto, consumer spending actually declined for the month by about 0.1%. But before we get into that, the total overall consumer spending as measured by retail sales increased 0.1% in nominal terms. So that means on a real basis, it still increased 0.1% for the month. But when we step back and look at the annuals, we see that consumer spending or retail sales compared to May of 2023 on a nominal basis grew 2.3%. What does that mean when we adjust for inflation? Well, that means consumer spending is officially in decline in real terms, down about 1% compared to last year. And that is definitely a scary thing for the United States economy. Given that 70% of our GDP growth is linked to consumer spending, that is definitely not what we like to see. Americans are not donating to the economy. I have no idea why. I mean, I couldn't imagine donating to something like a fucking St. Jude's or the ASPCA when the economy clearly needs us right now. It's ridiculous. Where are your priorities? But let's take a step back and consider spending a little bit more holistically here. So what we're seeing right now is the spending growth measured by debit and credit card spending for Bank of America customers. Bank of America is the second largest consumer bank in the United States, behind only Chase and I think followed by like Wells Fargo next. And then it kind of drops off a good bit. But what we're seeing right here is in the blue line is total spending by these cards. In the yellow line is retail spending ex restaurants. And in this red line right here, this is services including restaurants. And so what we're seeing in this is that total spending, everything is on the decline. Spending for everything is growing at a slower rate than it was at the beginning point of this chart, which begins in January of 2022. What we can see right now is they're all pretty much flatlining with total spending roughly in the same ballpark as retail sales. So they have a growing 0.7% for the month, according to Bank of America. I consider that more accurate because it's a private company and they're measuring actual credit and debit card transactions and not necessarily the inflows to retailers, which who knows how much they can gain that kind of stuff. But so what we're seeing here is that when you include restaurants, it's a whole hell of a lot stronger than when you exclude them. And the reason for it is actually relatively simple. If we go ahead and take a look at who is doing that donation to the economy, who's doing the Lord's work out here spending money so that the rest of us can make some money, it's all Gen Z. Shout out to Gen Z for saving the day once again. What we can see here is all of the generations that are still alive right now. Gen Z, millennials, Gen X, baby boomers, and traditionalists. I always thought they were called like the silent generation, I think that it would be, before the baby boomers. Because it's not the greatest generation. I think it's a silent generation. But either way, Bank of America is calling them the traditionalists. And what do we see? Gen Z is the only one whose growth rate actually picked up last month. So doing the absolute Lord's work. I mean, if we take a step back and consider why exactly that might be, it's pretty obvious. You know, like we said with the last chart, restaurant spending is pretty much the only thing that's keeping us above water. That's keeping nominal spending above 0% or keeping it positive in terms of a monthly growth rate. Who spends money at restaurants? Gen Zers trying to pick up other Gen Zers. So we're going to go there. We're going to flaunt our cash. This is restaurants and bars, by the way. So we're getting fat and drunk and doing it all together, which is a beautiful thing to see. It's really what this country was made for. So again, that is a motivating factor. But because the largest percentage of somebody's total spending at restaurants, like the largest percentage of your budget that you're going to spend at restaurants is found among the Gen Z population. So once again, carrying the team right there. But again, this has an explanation for it, and we can find it in this chart right here. So what we're seeing right here is repayment rates on existing debt. And what do we see? Gen Z in the blue line is absolutely falling through the floor. Joe Biden is forgiving their student debt. I guess they're hoping that Jerome Powell or mommy and daddy are going to cancel their credit card debt or something. Or maybe Bank of America will be nice and do the same thing. But what we're seeing is that Gen Z is prioritizing going out, getting fat, getting drunk, hopefully getting laid as well, over paying off their debts, which is really what young people are supposed to do. So the only reason that this is a cause for concern is because the other generations aren't picking up the slack. They're being way too smart, not donating to the economy and causing consumer spending to slow and actually fall in real terms. So that is very scary news for the US economy, but it is the situation we're facing right now. What it does do is contribute to the argument that interest rates are going to be cut more than once, especially maybe even more than twice towards the end of the year. Didn't necessarily change the market expectations, at least according to the CME Group's data for the day yesterday, but we'll be watching this very closely going forward. All right. Let's go ahead and move into our big stock movers of the day. Laziness as a strategy is absolutely the way to go. So we have La-Z-Boy, the furniture retailer, completely dominating the furniture market. Pretty much every other furniture stock has been shit in the bed lately. Like if you look at a Wayfair, if you look at RH, which used to be Restoration Hardware, all these furniture stores, it's been tough because the housing market right now, housing turnover is at a 30-year low, and furniture suppliers rely on housing turnover in order for people to buy them, because that's when most people are going out to get new furniture, unless you're like my dad and you wait 17 years before replacing a couch. Actually, it's been 20-something years, and I think we still have the same couch in my living room, so I'm very impressed that he's been able to keep up that performance, but most people don't do that. So La-Z-Boy was up 19.4% for the session because apparently people are still buying La-Z-Boy recliners. Now, they say that it was because they had record high conversion rates, meaning they were able to upsell pretty well, and same-store sales are holding on strong. So shout out to La-Z-Boy. That's great management in a very difficult situation. Speaking of good management in a difficult situation, we have Chegg. Chegg has helped countless amounts of students, your boy included, cheat their way through earning a degree, and it seems like they are figuring out their own cheat to market gains. And basically what they did here on Tuesday was come out and say that they were doing a full restructuring plan. They're going to be laying off a shit ton of people and trying to figure out product offerings that are based in artificial intelligence. So this is kind of the first example of AI replacing jobs, and it's happening indirectly because it's a company that's getting disrupted by artificial intelligence and having to lay off a lot of their workforce because of it. Stock was up 3.5% because the market just likes to see that they're not going to be completely obsolete, at least, in the near term. Moving on down below, speaking of companies that are going to be obsolete, we have Virgin Galactic down 13.4% for the session because the market easily sniffed out this company's bullshit. Honestly, I think the reverse stock split was one of the worst things that they could do. I get why they did it, to try to stay on the New York Stock Exchange, but it kind of brought attention back to the stock that it didn't have before. The thing's down like 40% since doing this reverse stock split, and it's like, I mean, the stock wouldn't be down 40% if they didn't do this reverse split and make all these big-ass announcements, but they're also completely fucking themselves over as well because they're diluting the shit out of existing shareholders. That means nobody wants to hold shares anymore. Basically, the company retired their only spacefaring vehicle, and that means it's going to be at least 2 years from now until they are back to go to almost space. Keep in mind, this company never actually went to space. They haven't been to space. Richard Branson has not been to space. Do not let him tell you that they are. They fly planes really, really high is what Virgin Galactic does. And so they retired their only spacefaring vehicle because of mechanical problems that couldn't be fixed. Now they're working on building out a new one. It's not going to be done for another 2 years. In order to keep employees from just completely dipping, they are basically force-feeding shares in Virgin Galactic down their throats. I don't know anybody who wants this heaping pile of radioactive trash that is Virgin Galactic stock, but all their employees are getting stuck with it right now. Very tough time to be an aerospace engineer. Okay, finally we have Lennar. This is one of the largest home builders. I believe it is the largest home builder in the United States. They were down about 5% for the session because do I even need to explain why? The housing market completely fucked. It's basically all we talk about here at The Peel because I'm trying to buy a house and it has been absolutely impossible. Either way, getting a good earnings report has been pretty impossible for these home builders, and that's exactly what kind of killed Lennar yesterday. Despite strong mortgage application data over the past week, the company's first quarter results still came in very weak, and it makes sense, of course. Last week isn't going to be reflected in their earnings, so maybe it'll be better in Q2, but the real problem is that they issued some downbeat guidance. That doesn't bode well for home builders, wannabe home buyers like your boy, home sellers even. I mean, there's real estate agents out here that are trying to make their nut, and they just can't do it because nobody wants to buy homes, or really the problem is nobody wants to sell homes. The demand for buying homes is absolutely enormous. When it comes to selling homes, complete crickets. But either way, let's go ahead and move on into our thought banana for the session. So we just talked about how Nvidia is officially the largest company in the entire world, but they are undergoing some legal problems lately. And specifically, their next stop on this train ride to AI supremacy, on the ride to the singularity, they're going to have to stop off at somewhere a lot dustier, grayer, probably smellier beforehand, and that is going to be the US Supreme Court. So it's Nvidia versus SCOTUS because shareholders I mean, I guess anybody's going to use the legal system to squeeze as much money out of anything as they possibly can, because that's what US law largely incentivizes. So what are we looking at here? This is Nvidia's market cap over time. As we can see, this only has them up to 3.2 trillion, so they're a little bit delayed, but more than 10xing from this point. That is just the beginning of 2023 right there. So about a year and a half, it's been literally one of the greatest rides in the history of capitalism, and that is not an exaggeration whatsoever. So what's going on with this court case? Basically, this Swedish investment manager with an absolutely unpronounceable name, but I'm going to try to do it anyway. I think it's 𝗪𝗏𝗪𝗀𝗀𝗏. That is the name of this investment manager that is suing Nvidia along with California shareholders in a class action suit. Basically, they're alleging that Nvidia committed securities fraud in 2017 to 2018 by failing to disclose, or not failing to disclose, by deliberately misleading investors on the portion of their revenue that was linked to cryptocurrency mining rigs. So this is a blast from the past. Nobody gives a fuck about this anymore. If these shareholders held shares since then, they made probably way more money than they ever would have imagined winning in this legal case. But fuck it, that wasn't good enough. Let's keep this legal case going, is what they said. The funny thing is, the case was actually dismissed in 2021, despite Nvidia agreeing to pay $5.5 million to these allegedly aggrieved shareholders, but there's literally no harm here whatsoever. And in order for US security fraud to be a legitimate case, there has to be some kind of harm shown. If you just held shares, you didn't get hurt whatsoever. So for whatever reason, the San Francisco court decided to pick this case back up, probably to collect some sweet, sweet legal fees from this giant of technology and artificial intelligence. So they reopened the case. They allowed the plaintiffs to continue. And basically, Nvidia is filing, I don't know the technical term, I don't think it's an injunction, but Nvidia is filing some kind of legal document with the Supreme Court, basically saying like, hey, can we just call this bullshit? Like, it already got dismissed. Why are we going back to this? The real takeaway here is that U.S. securities law, much like antitrust law, much like basically every law that we have on the books, especially those before World War II, needs some serious updating. A lot of this stuff is just barely applicable anymore here in the digital age, because these laws were defined when there was a huge informational discrepancy between institutions and retailers like you and me. They were made back, it was crazy back in the 1930s. It was literally in the middle of the Great Depression that all of this was going on. So maybe it's time we recycle some of those laws. We don't even need to completely rewrite them from scratch, but it's going to be a challenge considering that most of our fucking Congress people were graduating high school during the Great Depression. It seems like I certainly don't have the answers to what the new regulation should be, at least yet, but maybe in about 8 decades when I'm eligible to run for office, maybe by then I'll have it all figured out. Let's go ahead and finish up with a quote of the day from a U.S. government official from the past. We have Mr. Thomas Jefferson. He was the first Secretary of State, the second Vice President, and the third President of these United States. He's the father of the Declaration of Independence, and pretty controversial guy when it comes to the whole, you know what, I'm not going to say it on this channel, but either way, he once said, "I am not an advocate for frequent changes in laws and constitutions, but laws and institutions must go hand in hand with the progress of the human mind." Spitting absolute facts. As things change, so should our laws and regulations. Tommy Jefferson was seeing this all the way back in the day, and I think it was 1784 when he said this quote. I saw it earlier today, but now I'm starting to kind of blank on it a little bit. But either way, shout out to Thomas Jefferson for a great quote and continuing to keep his content alive for more than 200 years. We're coming up on the 248th birthday of the United States as well, which is also the anniversary of when Thomas Jefferson died, which was on the exact same day, I believe, as John Adams back in 1826. And very funny story. I think Adams's last words were, "Jefferson outlives me," and Jefferson had actually died a couple hours earlier, but Adams was in Massachusetts and Jefferson in Virginia. You're not here for a history lesson. Let's go ahead and call it for the session. Thanks for joining us once again here, apes. It is now 8:42 p.m. Time for me to hit the sack in about 18 minutes when my bedtime hits. But otherwise, wish me luck in my house search. Happy investing, happy trading. Bye now.